We are going to talk about a fair value gap, right? Fair value gap is the same thing as inefficiency and is also the same thing as imbalance. Okay, so it can be used interchangeably, right? How can you spot a fair value gap? You spot a fair value gap when you have three candlestick formation like this. When there is a gap between the first candle and the third candle is what is known as a fair value gap. Let's look at these three candles that are pushing to the downside. So we are going to identify it with the wick of the candle. Look at where the wick of this candle stops. From this wick here, I'm going to draw it out, extend it out like this, right? So this is the first candle. We have the second and the third candle. For this third candle, where can we spot the wick of this candle? Here, right? This is the wick of this candle. So I'm going to draw a straight line and extend it out like this, right? So between this first and the third candle, can you spot a gap? Let's say this particular candle here, this first candle here, the wick came all the way down, maybe to a point like this, right? And after this candle here printed, the third candle started, let's say around this point, also started around this point, printed upward like this. Okay, printed upward like this. Maybe the wick stops around here. You should see something like this. You see that there is no gap between the first and the third candle, right? This wick dropping down, maybe stopping around here, and this one coming up, stopping around here, has already overlapped, so we don't have anything like imbalance. Okay, but now that the wick of this candle, the wick of the third candle stopped around here, and the wick of the first candle stops around here, you can see here that we have a gap here. So this gap is what is known as a fair value gap. All right, so we are going to identify this on the chart. First, I'm going to map out a break of structure, then we identify a fair value gap. So let me start from here. You can spot a fair value gap anywhere on the chart, but the one that is valid, just like an order block, should be spotted around a specific area or zone. First, let's identify a break of structure. Let me label it break of structure. We have a break of structure here, right? Let's start identifying a fair value gap from this point. So the market pushes downward, okay, pushes down to this point, give us a change of character here, right? Let's label this change of character. We have a change of character here. So now let's talk about where we can identify a valid fair value gap. Okay, where we should be looking for a fair value gap should be when we have like a change of, the first thing, if you are looking at for a fair value gap, when you have a change of character like this, you want to look for your fair value gap around the discount area. If the market is pushing to the upside like this, you want to look for your fair value gap around the discount area, like down here. Now let me bring in my fib and draw from where we have the swing from the beginning to the end like this. Okay, from the beginning to the end like this. So from this 50% down, from this 50% down is where you want to look for your fair value gap, right? Is where you want to look for your fair value gap. The reason is because if you should spot your fair value gap around this premium like this, right, the market may just try to act as if it's to respect that point before pushing down, sweeping liquidity, okay, taking you out of the market before pushing to the upside. So it's always good for you to spot your entry points below, like down around the discount area. If you're looking for your point of interest, let's say your a fair value gap is your point of interest, you should be looking for your fair value gap from this 50% down. Where you spot a fair value gap is where you will map out. Let's say we have a fair value gap here, then you just map that point out, okay? But in this case, we do not have any fair value gap down here, right? Let me just delete this. So let's look at here. From this swing here, from here all the way up, from here all the way up, and looking at it from this 50% down, can you spot any fair value gap here? Obviously, there is no fair value gap here, right? So let's move on to another one. Okay, we have this change of character here, and price pushes down, right? Price pushes down. We are not looking for another block right now, rather you just want to identify a fair value gap. Okay, now look at this point here. From here we have a break of structure. We have this break of structure here, right? Now look from here all the way up. Okay, from this point all the way up, can you spot a fair value gap? Yes, you can spot a fair value gap between here and here, right? Now let me spot the fair value gap between here and here. Now, if you want to identify a fair value gap that will be valid, we'll try to map from the beginning of the string to the end part like this, right? From the beginning to where it ended, the string ended. From this 50% up is premium, is expensive, okay? From this 50% down is discount, is cheaper, right? So we want to see if we will spot a fair value gap below here. So you can see here from this 50% low, we have this fair value gap here. The fair value gap we've spotted is just around discount zone. Now let's take this off. Okay, let's take this off and identify another break of structure. All right, so here we have a new break of structure, right? We have a new break of structure here. So I'll label here break of structure. Now from this swing all the way up, can you spot a fair value gap? Yes, we can spot a fair value gap here. From this, between this first candle and the third one, you can spot a fair value gap. So this is the wick of the first candle. So I'll map this out. And where is the third candle? This is the third candle. So we are going to extend it out. So we have this fair value gap here. Now to check if this fair value gap is spotted on a discount zone. Okay, so we are going to use our FIP to identify where this fair value gap is located from the beginning of this string to the end like this. Okay, so from this 50% down, like I said, is discount zone, right? From this 50% up is premium, right? Now look at the fair value gap. Price came, the fair value gap was spotted from here to here, right? Look at here, price just tapped into, from this 50%, just tap into the fair value gap below the 50% here, below the 50%, reacted around this point before pushing to the upside, right? Now let's look out for another fair value gap. Here we have a break of structure, right? Let me just bring this here. We have this new break of structure here. We have this new break of structure, and from here all the way up, you can see here, from here all the way up, can we spot a fair value gap? Yes, we have a fair value gap here. Down here, 1. We also have another gap here, 2. We also have another gap here, 2. But price did not retrace inward. You can see, right? Price did not retrace inward. Okay. Now let's identify a new break of structure. This is not a break of structure. This is a liquidity grab. This point here, this is a liquidity grab. This is a sweep of liquidity. Price pushes up, swept liquidity, and started pushing to the downside. So here we have a change of character here. So you can see here we have a change of character here. From this swing here, from this swing all the way to this point here, can you spot a fair value gap? Can you spot a fair value gap? Let's say we did not see this coming. Price just gave us this change of character and started pushing to the upside. Can we spot a fair value gap? Yes, there is a fair value gap here between this first candle and this third one. So what are we going to do? We are going to map that out, starting from the wick of the first one down to the wick of the third candle. So here price just came in, tap into the 50% of the fair value gap here, right? And started pushing to the downside here. Started pushing to the downside. Now let's look out for another break of structure. Here we have a new break of structure here. We have a new break of structure here, right? This swing gave us a fair value gap here, but price did not respect it. Still tapping into the fair value gap before pushing to the downside. So here we have a new break of structure. We are going to map out the break of structure like this and label it break of structure. We have from here to here, and we have a fair value gap here. Price do not respect the fair value gap, pushes all the way and changes its direction around this point. So this is how to spot a fair value gap. If you want to identify a fair value gap, just do the same thing. Identify the swing. From the swing, try to look if you will see a fair value gap down. If you are confused, use a fib, okay, and identify the swing from the swing high to this, from the low to the high like this. Check from the 50% down, look for a fair value gap downward. All right, this is all about a fair value gap.